What's up everybody, Americana back with another video. Understanding this one concept not only made me a millionaire, but it taught me a skill that will make me money for the rest of my life. If I had to put it into one phrase, it would be percentages mean everything. I want you guys to write that down right now. Percentages mean everything. And by the end of this video, you'll not only know exactly what I'm talking about, but how to implement it to stop making emotional, mathematically unsound investment decisions. So let's get into the video. So when I say percentages mean everything in crypto, I'm going to use this example to kind of show what I mean. In short, they reveal what the true impact of your investment is, beyond just dollar amounts. First of all, they let you spot high growth opportunities, like this example over here. And secondly, they help you improve your risk management, like avoiding purchasing things like this coin over here. And like always, we use it in our SBS model to accumulate at just the right prices. So let's get into what this example is actually here for, right? A lot of people, like let's say your friend, he's a crypto investor, okay? Smart guy, he knows exactly where the market's heading, right? He knows coin one is going to $100, okay? It's already gone on a little run and it's already at 200, and at the beginning of the cycle, it bottomed out at $5, right? That's where he bought. He bought at $5 and he knows for a fact it's going to 200. On the other hand, he tells you, hey, don't buy coin 2. It's still, at the lows, and coin 2 is actually only going to $15 from here. So don't buy coin 2. You might look at this and be like, you know what, he's right. I want the coin that's going to go to $500, okay? I want to be able to say, I bought at 200 and I sold at 500. You're like, I don't want a coin that's only going to go to $15. Some of you might, depending how your brain works, you might look at this and you might know exactly where I'm going with this concept, but I promise for a lot of people out there, this stuff doesn't register in their heads this way. Okay, they see the number being higher and associate with that being better or good. Okay, and they see this gain right here as being a sign that it will continue on into the future, right? So for my people out there that are like that, let's go ahead and break this down. So before we get into breaking it down, I want you guys to take a second and go in the comments and tell me which coin you would purchase, 1 or 2. Okay, I'll give you a couple seconds to get your answer in there. But which coin would you purchase, 1 or 2? All right. If you said coin 1, this video is for you. Okay, you'll learn something. If you said coin 2, stay in the video for the ad revenue, but you can go ahead and exit out if you'd like, right? So why is it that? Okay, coin 1 here, while it is up and it does have a target of $500, okay, and $200 is a high price for a coin, especially after coming off the lows at $5, right? We'll go ahead and go over here, do some quick math. Okay, so my initial value and final value, oops, sorry about that. My initial value 200, final value 500. Remember, your friend who told you to invest in these coins knows exactly where the price is going. Okay, so your friend is telling you to buy a coin that is going to have 150% increase from its current prices. Okay, I want you to stop and ask yourself, how does that benefit you? Okay, compared to coin 2. Because if we go ahead and do the math for coin 2, we have, what'd I say, $5 to $15, okay? So you'd actually be making a 200% increase in coin 2, all right? I know it doesn't seem like you're making as much money, okay? For every $200 you invest here, you're gonna make $300, right? That seems like a good thing. That seems all fine and dandy, right? For every $5 you invest here, you're gonna make 15, all right? But prices do not matter, okay? This could say 200,000, right? Okay, and this could be 500,000, all right? This could be 0.0005, right? And this could be 0.0015, right? we could have this exact setup, okay? And you would make $300,000 for every coin that you purchase here. You would make a fraction of a penny for however many coins you purchase here, okay? But your percentage gain will be higher on this, okay? The way crypto works, being able to buy partial, we'll call them shares, partial pieces of a coin, okay? They're divisible. That benefits you, okay? You can always chase the higher percentage coin, right? You don't have to fall victim and fall trap to a coin that just has a large flashy dollar amount. All right, like I said, that concept will make sense for a lot of people already, but there are people out there that don't quite understand that. So that's my first little spiel about why percentages mean everything. And it's also the kind of least significant portion of it, okay? Another reason, and in my opinion, the most important reason, all right, is it helps you with risk management, okay? If I see a coin here that's already broken its previous highs, right, already had an initial pullback, and kind of going on its final last hurrah, if you would let me say so, right? Its final push right here, okay? From a risk management standpoint, right, I don't preach purchasing stuff that's up this high, and I also don't preach using stop losses, but just for the sake of the example, right, your stop loss on something like this, or your risk to reward, really, I should say, right, because most of you, or if you are inexperienced or whatever, will just bag hold this coin, right? Let's say this coin goes to zero after this, you're bag holding it the whole way down, right? Or down here is when you get scared, when it breaks out its low, even though it's already dropped however much percent, right? 97 something percent, okay? So this is what your risk to reward on a coin like this looks like, okay? Versus a coin like this. Sorry about that. It's a short position. Okay. Versus on a coin like this, looks a bit more healthy, in my opinion. Okay. Up to $15, right? This looks a lot more natural. Okay. And this is because the percentage is more balanced. Okay. Based off of how much it's come up off of the bottom. Any coin that hasn't started ripping yet, hasn't started pumping, is going to be more advantageous to invest in, okay? When you're using my strategy, right, when you're using SBS to time these markets, you're going to be investing into altcoins and shifting out of Bitcoin when coins look like this, right? For example, this is like Solana right now, and this is like an Ethereum Classic, or this is like a Monero right now, okay? I would not be investing into the late stages of Solana's bull run, okay? I would be investing into the early stages of Monero's blow off top, right? This might only last a couple days, right, as before the whole market turns over and goes to crap, okay? But if it does turn over and go to crap, I'm not getting as wrecked as I am from bag holding a coin that's already up 500%, 600%, 1,000%, 10,000%, whatever, right? Just because it's at $200 and your friend knows for a fact it's going to 500, right? I just gave you two reasons why you actually should not invest in that coin, right? From a percentage standpoint, there's better opportunities, even if the coin is priced lower. And from a risk management standpoint, you're way better off. All right, so that's all I have on the made up coin, the fictitious coin example, right? Let me give you a real world example, okay? We will use Bitcoin here, all right? I'm off of log scale at first. Just want to show you guys something, okay? So from this candle to the top, okay? You had 93% left in Bitcoin, okay? 93%. this is your purchase price here at about $6,000. So you were already up 453% on this coin. And what you're risking here is the final 90% of the move, okay? You caught 453% of this move. And you're risking holding it for an additional 93% or to catch the last 93% of the move. It's a little bit different because your price is obviously lower, okay? So you do the math based on this 440. So this 440 would essentially double, right? That's how we get the 980%, right? But from a percentage standpoint, you're sitting in a coin that has 93% left, right? For new entrants into the market, they're going to get a 90% move, okay? Now, I'm not going to get into it in this video, and you probably will not see me get onto it or get into it in this YouTube channel at all or on Instagram at all. This is pretty much the secret sauce of the model, of the strategy, of why I'm able to not only outperform stocks and day traders and other crypto investors, but outperform even Bitcoin itself, okay? It's the rotational aspect, all right? So let's go ahead and pull up Ethereum Classic right here, okay? And let's drop this vertical line in here for you, okay? So I'm going to take this off to clean it up a little bit, but just remember that's 93% right there, okay? So 93% move left in Bitcoin. All right, we'll go ahead and take this off there as well, but just remember you already caught 453% of the move. All right, here we have Ethereum Classic. So this is very similar to the example that I just showed you, okay? Bitcoin in this example would be coin 1, and Ethereum Classic in this example would be coin 2. All right, when I spoon feed you the information like this, the answer does seem pretty clear. All right, but when you see it in a real world example and you know some of the emotional aspects and sentiment aspects that were driving these markets at the time, all right, now you can see why this is a hard decision or a hard thing for people to grasp, okay? So let's go ahead and we'll just do a simple little trend line, right? Trend lines aren't my favorite, but your friend comes to you and he's like, hey, you need to invest in Bitcoin. Okay, same friend as the guy before. Hey, you need to invest in Bitcoin. It's going to go to $65,000. I promise you, right? And there's coins out here like Ethereum Classic, and he's like, dude, this hasn't even. Look, it's still in a downward channel, dude. Like why would you're cooked? Why would you invest in something that's still down? Okay. And it's because, well, friend, if you think Bitcoin's going to keep going, I'm going to look for the best deal in the market. I'm going to look for what has the most potential, right? I've already missed this move. It's already up 450% from your entry, right? I'm happy that you're up, but I'm not going to get in for the final 93% when there's coins like Ethereum Classic that are at, we'll just call this $7, or we'll call this, let's give you all some accurate information, right? This is about $7.50, okay? So when there's coins like Ethereum Classic, all right, that might peak, let's say it's going to peak at, what's that, $70, okay? So first we'll do Bitcoin here, right? He wants you to buy at 33.5 and sell at 65. And sell at 65, right? So he wants you to get the 94% that we talked about, right? And you're smart enough, you're a mathematician, you're emotionally based enough to make a strong investment decision, not off the fact that something is down while everything else is up, but you actually see that as an opportunity, all right? And you invest your money into Ethereum Classic at $7.50, and your friend says, dude, that's stupid. I mean, It could go to 70, but I don't really know, I don't think it will, right? So you're smart enough to make the right decision and make 833%. All right? Do you guys kind of see where I'm going with this? It's a hard decision to see and to make, but once you understand it, it's a very easy concept. Stop buying coins that are already up, okay? If you're in the Discord, if you've taken my course, okay, you're going to understand what sends these altcoins and things like that, what triggers their runs, right? And you'll understand why people invest in Bitcoin at first. It's kind of a flight to safety, okay? But take advantage of it, okay? My point being is that if you're smart, if you really, really, really want to grow your wealth, right, you can just buy Bitcoin, okay? 1,100% gain, that's cool, right? Or, what I say it was, 450? You can get a 450% gain. Sell, right? I'm not going to talk about on here what triggers you to rotate, right? Sell and rotate into Ethereum Classic for an 830% gain, okay? So you can make 600%, sell everything, and go make another 800%. Kind of a no-brainer, right? Kind of a no-brainer. Just with some simple math, with some simple observations, and the simple knowledge of what triggers this, all right? So this is kind of a concept I want you guys to think about. Hop into TradingView, kind of mess around with this, play with it yourself, see if you can find some other examples of what I'm talking about. And one thing to keep in mind with this entire strategy is you do need to expect a 3 to 5 year time horizon for these kinds of percentage gains, okay? This is another reason that the model works well. You have plenty of time to allocate capital into it, but you do have to be patient and disciplined enough to let this event that I'm talking about that occurs play out over time. If you can focus on percentages, you'll unlock life-changing financial growth. My Crypto Wealth Blueprint course teaches you how to master this mindset, optimize your SPS buys, and position through cycles to time rotations. I hope I see you guys there.